The economic consequences of Canada's housing crash are way worse than the data is telling us, according to CIBC. And the reason the headline numbers are lagging reality. If you want housing analysis without the spin, hit the subscribe button. CIBC just released a report titled Canadian Housing Anatomy of a Correction. And the most important line in the entire piece, prices are still too high to buy and not high enough for builders to be able to build. That's the trap. Buyers still can't comfortably afford to buy houses, but builders can't make projects pencil, and the macro damage is just starting to show. Let's break it down. The national benchmark prices are roughly back at their pre-COVID trend line, although I think they were pretty selective with the trend line that they chose here. We had a bit of a thread going on it on Twitter when I posted this chart. Based on mortgage payments, we're pretty far off the long-term trend, as you can see in this chart here. But they also have the Ontario benchmark at 28% below the long-term trend line, except they're using like 2016 to 2019 as a trend line, which was it was a ripping market. So maybe not the best trend line to use. BC is about 13% below its early 2022 peak. And condos obviously are where the real pain is. Again, 2016 to 2019 trend, condos 30-something% below that, down 15% from peak. Small GTA units obviously hit the hardest, which they have a pretty interesting chart on this here. It shows that small condos in the GTA are seeing the biggest price declines. That's obviously the unwind of those investor and speculator units, which I covered in the most recent video. With research from the Bank of Canada, this is your pre-sale math and speculation, and people who thought they were going to flip paper, that whole model breaking, and you're seeing the collateral damage of it now. Basically, equity evaporating in the most leveraged segments. But they also observed that housing starts are hiding the collapse. And they even have this is pretty funny, this is very Ben Tal to put like this, just these Microsoft Word images in here. But CMHC defines a housing start as when the foundation reaches grade, right? So not when the excavators are in the ground, not when it's shored, but when it's actually above the ground. So in high-rise projects, that can actually be 1 to 2 years after the actual build decision. So today's strong housing starts that we're seeing, they actually reflect late 2024 decisions, or even 2023 or 2022 decisions when people had pre-sales.